Hey, Jem and Jen, everyone. This is Clement from Commit, and today I'm with Jane from zkLend. Hey, Jen, how's it going?
Hey Clement, it's great to be here. Thank you for having me. It's things are going well. Yeah.
Perfect. Well, I'm really happy to have you on this podcast. This is the first time we have someone working on StarkNet. So please, could you, introduce yourself and also, it will be the second question. Please introduce yourself first.
Yeah, of course. So hi everyone listening in. I'm Jane, and I'm one of the co-founders and co-project leads of zkLend, and we are a lending protocol that is built on top of a layer two solution called StarkNet. But before I go into the product, let me talk a little bit about myself first. So I guess I've been working both in the financial and Web2 industry for a couple of years prior to joining DeFi, and actually started out my career in banking, but very quickly realized that it wasn't the right fit for me, just personality wise. What I really enjoyed doing was a variation of things. And I felt that working in banking, while it gave me the structure that I needed at a very kind of early on in my career, I felt that I didn't really get to use my creativity. And so I went ahead to go join a startup at the time. And I joined a food delivery company called Deliveroo. So it was quite a change from working in banking. But I ended up loving it. I first worked with riders and operations. So figuring out how many riders to place in an area at a certain time. And then I ended up working in strategy and working as chief of staff in the Hong Kong office. So it really went to the point of, I wanted unpredictability in my job, and I ended up going to a job where I was constantly firefighting in the early days.
Well,
So
it's still firefighting in this industry.
I know, right? I think it's slightly addicting, actually, the firefighting piece. But I think long term, I realized, the company's grown so much. I almost feel like I grew up with it, even though I was only there for 4 years. But I felt that it was time to move on to my next challenge after the company IPO'd. So I decided to, look around, sniff around, see what was interesting. And this was back in 2021. And back then, a lot of my friends had been just going into DeFi, going into exchanges, and I knew a bit about crypto. Like I've played around with Aave, Compound, but I wasn't like fully immersed in the space. So I was very fortunate at the time because I got to meet my two co-founders, Jonathan and Brian, and they were looking to start something, and they were looking for an operator. So as unsexy as it is, I am the last person on the bandwagon, but I was very fortunate to kind of fall into the right place at the right time and manage to really get along with the people that I met. So I decided to join in on the project.
Okay, cool. Um, Well, actually, when you're the last one entering the journey, you are probably the best one to work more and learn faster than the other one, because you have to
Yeah,
learn and get everything that's the others already learned previous months or years ago.
yeah, for sure. I mean, just to talk about Brian and John a little bit, John's actually, he's been in the blockchain space for a while. He's a smart contract developer, so obviously very familiar with the ecosystem. And my other co-founder, Brian, actually worked in banking as well, so private equity. And so even though he wasn't like working in DeFi full time previously, he obviously has a lot of experience with financial products. So I think we all kind of bring to the table something quite different, and a very different mindset, I guess, as well. And I think that's what balances the team out.
Okay. So this is my first question to you. How would you sell me zkLand in under 30 seconds?
Yeah, so zkLend is as I mentioned, it's a lending protocol, and we leverage Starknet's zk rollup, or as people like to call it, validity rollup technology. And fundamentally, what this network offers is scalability and security. So what it really means at its core is that zkLend offers a money market product where you can borrow and lend uh, core assets at a very low transaction cost, and this product is going to be offered to both DeFi users as well as institutional users through zkLend Institutional.
Perfect.
Yes.
Um,
Did that go in 30 seconds? Maybe a
Yeah,
little.
yeah, less than 30 seconds. So pretty, yeah, you nailed it. So in your opinion, sorry, how crucial is it to lower the barriers to entry for Web3 protocol? And like, could you share your strategy that's, the zkLend strategy to empower, to employ to drive a greater adoption into this space?
Yeah, absolutely. Let me think about this. Yeah, so I guess I would break it up into two pieces. I think the first piece is just right now, if you look at different networks and different layers, different types of wallet solutions, it's all still quite messy, right? You have MetaMask that are externally owned accounts, which means that you have a public and private key, and you use your private key when you interact. There's obviously account abstraction coming in where users could I guess customize their wallets however they want to make for a stronger to make for like a more optimal user experience. But all this put together is still extremely confusing for users starting to use crypto for the first time. And that's why, in my opinion, exchanges are often the first gateway to people who are starting to use crypto in the first place. For example, they're interested in Ethereum, they're interested in Bitcoin, more likely than not, they open an account on Binance, they trade a little bit, and then they start understanding, oh, whoa, what's like impermanent loss? What's like an AMM? Instead of staking on Binance, maybe I can go into Web3 and choose a chain where I can interact with these protocols. And for me, at least, that's how my crypto journey actually started. And I think actually probably more than 50% tends to be the case. But going back to the point in how zkLend is supposed to transform all of it, I think at this stage, if we're being realistic, much of the trajectory is still exchanges and then onboard into this Web3 ecosystem. But in the middle, there's still a lot that gets lost in translation. And what I mean by this is like, how do you open a wallet? How do I like pay gas in Ethereum? These are all things that like for me really was quite a black hole when I first started learning how to use crypto. And I think while layer twos and ZK rollups are by no means things that are super simple to explain to people, I know that it does take time. People who usually start using layer twos or ZK rollups tend to be a little bit more sophisticated in terms of their crypto experience. I do think that the technology that layer twos, especially Starknet, has to offer can help users kind of skip over that step of maybe downloading a MetaMask, interacting on Ethereum layer one and trying out different chains. I kind of foresee the whole user journey to go from exchanges maybe directly onto Starknet. And the reason why is because Starknet offers something called account abstraction. And what it is I think I may have alluded to it earlier, but it makes for a much more optimal user experience when it comes to your wallet. So if you forgot your private keys, or if you lost your private keys, or if you lost your seed phrase, how do I help you recover your account? Like maybe there's such a thing called social recovery. Or if I don't want to pay gas on my transactions, maybe the protocol could actually pay for my gas. That's what we call, it's blanking on me, but like these fee subsidies are something that can be offered as well through account abstraction. So the really long answer to your short question is that I think right now at this stage, it is hard to just jump right into Starknet and start using it. But I do think that once more of the technology matures, Starknet can really become, going from exchanges directly to layer two, and it could make for a very simple and optimal experience.
Okay. So we're still staying in DeFi, and so with the rapid evolution of a new DeFi user market, we've been to DeFi 1.0 2 years ago with the DeFi summer, and we are entering a new DeFi ecosystem mechanism. What's your strategy at zkLend to continuously adapt and achieve product market fit?
Yeah. So I guess two things. I think first is that we're quite uniquely positioned because we are we're mostly focused on Starknet at the moment.
And the ecosystem is pretty new as well.
Yeah, and the ecosystem is pretty new. I feel like my understanding of StarkNet like 3 months ago is so different than my understanding now of the network. It just keeps changing. But I think for us, it doesn't change our initial goal, which is to become the liquidity like a liquidity provider on StarkNet. And what that really means is that if StarkNet was to become like a gaming network, or if StarkNet was to become like an NFT hub, what we do is very simple. We allow users to deposit and then borrow and lend. And until we do a good job there, I don't really see a point in us kind of expanding to newer products, because I do think that this is the bread and butter of everything, not only DeFi, but GameFi, NFTs, etc. And I do think we are in quite a unique position because StarkNet is not EVM compatible. And what that means is there is Kakarot coming, but what that means is you don't just port your Solidity code over and expect it to be performing exactly the same way. We do write everything in a language called Cairo. And Cairo is basically a coding language that is optimized for generating Stark proofs. And the reason why Starkware actually came up with this language is because, again, it's just more optimal for the way that their technology stack works. So for us, it's a challenge of rebuilding everything in Cairo, but also making sure that we build the foundation out before we move on to new products. But without going into too much detail, we are quite interested in the future in other DeFi products as well. Obviously, there's a lot around things like cross-chain liquidity, liquid staking derivatives. These are all areas that we are thinking about, but I just don't want to talk about it yet until we've done a good job on the lending side.
Okay, well, so you already erased one of my question, so no big deal. I will have to find another one later.
Okay.
What do you envision as the next big thing in user-centric design for DeFi?
User-centric design.
For DeFi specifically, yeah.
Yeah, I feel like I feel like I kind of answered this, but I'm gonna talk a little bit more about account abstraction, and the reason why
Yeah.
is it's so
It,
central.
it's still, I mean, in my opinion, account abstraction is still something. I mean, it's like, for example, during ECC, it was really a big thing. There were a pretty huge convention during ECC about account abstraction, but it's still something. Right now, we are still not experiencing it.
Yeah.
It's completely new, and most of the user right now in the world, wherever they are still using MetaMask or whatsoever, like this kind of USB key, completely unusable. And yeah, so maybe account abstraction is something. If you have something to say about it, I would be really happy to hear that.
Yeah, of course. So I'm gonna start from the beginning around why people need account abstraction and the state of it across, I guess, both Ethereum as well as StarkNet. But historically, most accounts are externally owned accounts, which are known as EOAs, and MetaMask. The Coinbase wallet, they all operate on EOAs. And while that's great and all, there's no flexibility, right? I always need my seed phrase in order to re-import my account or my private key. And there's no, I always have to pay gas in whatever the currency or whatever token the network requires it to be in. There's zero flexibility. Whenever I approve a transaction, I have to approve the asset and then I have to swap it. I have to assign 2 transactions. I'm sure that's all quite familiar. And obviously, the Ethereum Foundation or the ecosystem has been working really hard to move away from that because obviously that's not the way to onboard the next billion users. It's just too much, too many pitfalls, and too much could go wrong very quickly. And I think that obviously with EIP 4337, which is, I guess, to date, the most promising EIP in implementing account abstraction on Ethereum without requiring changes on the base level of the protocol, I think there are still some ways to go before protocols and projects actually start adopting to this new standard. Now, that's going to take time because I think someone said this once. It's like, existing protocols have to retrofit their current network in order to fit into this design of account abstraction. Whereas on a network like StarkNet, account abstraction has been enabled since day one. And that's really interesting. It goes both ways because obviously some of the more popular wallets like MetaMask are not necessarily supported just yet. But there also are native wallets like Argent and Bravos that have native account abstraction like features built into it. And what that means is from day one, I don't have to worry about my seed phrase, or I can do multi-call transactions, for example, where I don't need to sign 2 transactions in order to execute a swap. All of this can be done through one signing, or I can have a hardware wallet where I would just approve my transaction on my phone when I sign it on my laptop. These are all like super useful features. And these are features that I only know because they exist, but there's so much more that could come into play in the next few years, as you mentioned, Clement, in terms of the different features that will ultimately change the user experience.
And speaking of, because you've mentioned, obviously the wallets like Argent or Bravos, and don't you think that it could be some kind of a drawback for some users to have to use another wallet than the regular one they are using for everyday transaction? Even, for example, if I'm speaking of another zk roll blockchain like zkSync, for example, you can use your MetaMask wallet. Now for StarkNet, you obviously need to download Bravos or Argent, and even for Argent, it's in my opinion, it's still a pain because it is even not supported in their mobile application. You have to download a broader wallet, and so in the broader wallet you have the StarkNet, and in your smartphone wallet you have zkSync Era. So yeah, how do you foresee this kind of layer 2 wars playing between all this zk blockchain, the way we use the wallets, the way, I mean, we have to deal with all of this stuff.
Yeah, I'm definitely a MetaMask like I was using MetaMask up until a point that I interacted on StarkNet. And I think we just need to break this mentality that because MetaMask is the best solution out there, that we're not open to using other wallet solutions. And I do see that a lot across different like networks and protocols in general, not just for wallets, but when people like something that works, they generally shy away from like newer innovation that may not be as convenient at the start. And I think this is very much a case in point with Bravos and Argent. For me, actually, having used both solutions, I've come to realize that the security of both wallets are much stronger than the security of my MetaMask extension. Not when it's connected to my hardware wallet, but when I sign my MetaMask, obviously it's a browser extension, and I enter a password and I sign my transaction. This could easily be hacked. For me, when I transact on Bravos, I sign the transaction on my extension, but on top of that, I get a notification on my phone, and this is my hardware wallet signer. So automatically, all my transactions are already much safer when it takes place on Bravos. So without drilling into it, I really think it's just the mentality. I think we're like 5%, not even of the way there. And if people are already so fixated on the fact that they only want to use MetaMask, ultimately that doesn't encourage innovation across like blockchain. And the whole point of crypto and blockchain is that we're still early, and that's why we need to keep iterating.
Okay. So speaking of StarkNet again, how the StarkNet scalability solution has specifically influenced the functionality and the design of zkLend, and what are the advantages it brought to you, and obviously to the end users? Because just to to explain to people listening, you have 2 separate solutions: one for retail investors and one for corporate one, institutionals.
Yes. Great. So maybe I'll spend time on the DeFi product first because our institutional product is actually not live yet.
Yeah.
And in fact, we are just starting to build that. So it's still early days. But on the DeFi product, we've launched since May. So it's fully functional. People can go onto our website and access the app. In terms of what we can leverage on StarkNet or through the StarkNet tech that would enable for a better money market, I would say there's three things. Obviously, first is just in terms of cost. All the StarkNet transactions right now are on average sub $1, sometimes even less than 50 cents. And in fact, there will be volition being introduced in the second part, probably in Q4, second part of the year. And what that really means is that apps can actually choose to record the transaction data either on L1 or it can live on another chain. And so that should greatly reduce StarkNet transaction fees even more, because right now 95% of StarkNet fees are actually from L1 storage. So I think that's really interesting. So you should be seeing transactions in the single cent area in the next few months. The second proposition that zkLend offers is, in terms of the user experience, it's a lot smoother to borrow and lend on StarkNet just because of the multi-call feature that was enabled. So as I mentioned earlier, it takes a couple of transactions before you can actually deposit on Ethereum, for example. But on StarkNet, you can actually bundle all your transactions and sign it in one go. And it sounds really, really negligible, but it does make for a huge difference because you don't need to stand there, wait around for your transaction to be confirmed, and then execute another transaction. And maybe you forget in the middle and you get distracted by YouTube. And the last piece of what makes the protocol more efficient than other lending markets is on liquidations. And this is pretty interesting because historically, if you look at Compound or Aave, when a user gets liquidated, more than up to 50% of their position can be liquidated, even though it might not be underwater. So let's just say your position is only underwater by 1 or 2%. The liquidator in Compound and Aave, in order to make up for the high transaction fees in Ethereum, they allow liquidators to come in and liquidate up to 50% of a user's position. And on zkLend, our liquidators can only liquidate up until the point to bring the user's health factor back up to 1. So here, we really do strike a balance between incentivizing liquidators as well as making sure that liquidations are efficient and doesn't hurt the user unnecessarily, because we're actually able to optimize for performance on StarkNet so that transaction fees are low and confirmation times are very fast to make up for any other inefficiencies.
So in case of so that is really interesting because yesterday, so when this podcast is recording, this is post curve exploits,
Yeah.
and yesterday happened some pretty huge exploits on liquidity stable pools on curve, and it does trigger the Aave collateral, and how all this how would you assess this on zkLend, for example, if you face the same issue, for example, because in the end the bigger issue is to it's to liquidity. I cannot say that.
It's okay. I know what you mean. Is it liquid?
Yeah, the stakers of Aave, for example, to repay the bad debt. So how do you assess that, for example, on your protocol?
Yeah, I guess there are a couple ways to think about it. I think first is just obviously having enough liquidators or making sure that there's a liquidator out there running liquidations so that, positions don't fall underwater or go underwater so much that you can't even recover the bad debt. So, but that's just the setup of the protocol. It's not necessarily so much to do with efficiencies or inefficiencies of layer ones, layer twos. I think the other, and I'm going to diverge a little bit, but I think second part of what we look at when we make sure that liquidations are efficient is actually the depth of AMMs. And this is quite interesting because at this point, I can't say that liquidations in terms of AMMs are or put it this way, because Ethereum layer 1 still has the greatest depth in terms of a lot of tokens like Ethereum, wrapped BTC, and things like that. So when a liquidator goes in to liquidate on Ethereum, the slippage generally is lower. But if you go on a layer 2 where liquidity might be a little bit thinner and you are liquidating really, really large positions, there could come a point where there is much larger slippage than on other layer 1 AMMs. So that's another consideration that we look at. And because we are in early days, that's why at zkLend we actually set up borrow caps so that we limit any kind of one single loan size in order to mitigate any kind of large cascade liquidations coming through on the AMMs.
Okay.
Yeah, sorry.
No. Please go on.
Yeah. And so I guess the last bit is just in terms of timeliness of the liquidations. Again, it's about so right now, StarkNet actually doesn't have free market. So all the transactions that get processed are first in, first out. So they just get processed in the order of. And because there are no transaction times are really fast after 0.12, I'm not necessarily concerned about like liquidations not taking place in time. Whereas I think with layer 1, with MAV bots, that could very much be the case. So I think for now, there are pros and cons of liquidating on layer 1 versus liquidating on layer 2. With layer 1, the pros obviously being that you have much higher or much deeper AMM depth. But at the same time, there could be delay in liquidations, just depending on how transactions are ordered, that the liquidator might not be incentivized to liquidate, or the liquidator might end up taking a loss, for example. Whereas on layer 2, I would say things are relatively more structured. However, liquidity is thinner because the network is still relatively new.
Okay. So we'll end the first part with this question, and we are still. I will still stay on the same topic about what happened yesterday about like security this time, but it's some kind of paramount concerning DeFi. Can you shed some light on the security measures that zkLend has in place, and particularly in light of operating on a brand new layer 2 like StarkNet?
Yeah, this is tough because people are always asking, what's next, and I think the honest answer is like, yes, we're always thinking about what's next, but at the same time, like, we don't want to move so fast that we forget about like what's fundamentally most important. And I would rather move slower and make sure that the protocol is extremely secure than to make sure that than to kind of push out all the bells and whistles just to get hype. So I think that's actually one of the biggest struggles, I think, for us as a team, because the space is moving so fast and you constantly want to feel like you're relevant and you're catching up and you're kind of in the narrative of the latest hype. But at the same time, there's only so much resources a team has, and it's about balancing that. So I guess to go into that a little bit more, we wrote our contracts in Cairo 0, which was, I guess, the previous version of like Cairo that is still kind of being used. But we got that code audited by 2 auditors, and we ran a formal specification exercise by Nethermind. So, we spent a lot of time there. But obviously, given StarkNet network that is always changing, they did come out with a new kind of version of the Cairo language called Cairo 1. We've had to rewrite all our code since. And now that code is being re-audited or being audited because it's new code before we kind of roll it out to the public. And I think this kind of points to the fact that we do take security very seriously, because for all, I think a lot of the ecosystem, including ourselves, we kind of thought about this late last year. We're like, should we spend money to audit our Cairo 0 contracts if we know that there's going to be a new version coming? But for us, knowing that we're going to be taking in money as deposit, there was just no way to say no as an answer, because otherwise, if anything happened to your code and you didn't actually like do the due diligence and put it through audit, I think that is like that then that's on the protocol. So I think those are things that we do. But besides audit, we also work with a security company called Hypernative, and they're an Israeli-based security company. And so not only looking at our code, but we have a monitoring system that constantly monitors like weird or like strange or large activity that takes place in the protocol, so that the team gets alerts and we're able to kind of react in time.
Okay, perfect. Well, if I recall correctly, like I think during ECC I saw it was probably like Certora, the auditing firm, that got some swag with a like caption like catchphrase like move fast and break nothing, and this is something really, in my opinion, really important into this space because it goes so fast. You have to adapt all the time, but in the meantime, if you touch something, you can, I mean, if you cut the wrong wire, you can just break everything.
Yeah, yeah. And I mean, not to like bash on anyone, like move fast and did you say move fast and break everything, or move
No,
fast?
nothing, break nothing.
Okay, and break nothing. You know, it's a pretty it's a pretty tough like job, right? Everyone
Yeah.
wants to move fast, but you know, blockchain human resources are actually very scarce. It's tough to hire devs, I have to say.
So this is the second part of this podcast, and this is my favorite part. So this is the yay or nay questions. So to summarize, you have 11 questions. You can only answer by yes or no, or you have a joker card if you don't want to answer this question. So I hope you're ready. It won't be too tricky.
As ready as I will be.
Perfect. Considering the increase in layer 2 solutions, would you say that StarkNet is a game changer in this competitive field?
That's an easy yes.
Are NFTs overrated JPEGs?
Can I elaborate on that or no? Only yes.
You can elaborate if you want.
I think it depends on your definition of NFTs. If you think about them as, you know, communities and display pictures, then yes, they're overrated. If you think of them as a tool to convey identity and so much more than ticketing, things like that, then absolutely not overrated.
Okay. Do you think that despite the promise of decentralization, DeFi is still dominated by centralized entities?
Yes.
Would you accept to be paid, be careful, in UST if it goes back to $1?
No.
Do you think people working in this industry really understand what they are doing?
Stop. That's such a generalized question. Yes.
Would you say that blockchain technology is set to become as commonplace as the internet in our daily lives?
Yes.
Is crypto more complex today than 10 years ago?
Yes.
Is StarkNet better than zkSync?
Yes.
Do you think DeFi is essential to the blockchain industry?
Yes.
Have you considered launching zkLend on another chain before StarkNet?
I have. Yes. But I came to the conclusion of launching on StarkNet first anyway.
Is ECC the best Ethereum conference in the world?
Yes.
Perfect. Congratulations.
I didn't skip.
10-10. Perfect. No doubt. Well, thank you very much, Jane, for that. Thank you for your honest answers. Yeah, if you're listening to the podcast, don't forget to subscribe and don't forget to take a look at what zkLend is doing on StarkNet. And yeah, see you on the next episode.
Thank you.